Paramount Skydance set to report quarterly results. That's going to happen after the bell today. For some insights on what to expect and how the chessboard may move, want to get into all of it with Rich Greenfield, partner and co-founder of LightShed Partners. Let's start with what you're expecting on the earnings, but maybe perhaps more importantly, what you think it portends as this merger chessboard seems to be evolving.
You know, the crazy part, Andrew, and I'm sure you all and David have certainly reported extensively on the multiple approaches Paramount has made to Warner Brothers Discovery. And I think the big question investors want to understand is, can Paramount Skydance be successful on its own, or is the entire strategy predicated on needing to buy Warner Brothers? Because within weeks of closing the Paramount transaction in August, it appears they were already on the prowl trying to buy Warner Brothers. And so the question is, it appears this was always a two-step process. The question for obviously for investors is, how much does this matter to their ability to be successful?
And that's the question I'd ask you.
I mean, look, when you have the beauty of content, right? I don't care whether it's sports content, Andrew, whether it's entertainment content. What we've learned, and Netflix has proven this, and actually Ellison's even proved this in the early days since taking over, is money talks, meaning content walks. The reason House of Cards went to Netflix versus HBO is because they paid more money. The reason the UFC moved over, right, from ESPN over to Paramount is because David Ellison and the team at Paramount were willing to pay more. The reason the NFL is on Amazon, like we can go on, but this is all about money. And so the real question is if you have limitless money, why do you need to buy another studio? I think that is a really important question for David tonight. Why can't he just actually acquire all of the content he wants by paying more than others, which is a strategy that we've seen time and time again across Hollywood and sports media?
That to me begs a very interesting question about this industry, which is if you're saying that just content goes to whoever has the biggest checkbook at any one moment, it effectively undermines the argument that any of these companies have anything else besides capital. That there's talent, quality, reputation, all those things you're effectively suggesting have nothing to do with anything, and it's just the checkbook that gets you the content. That may be true, but it sounds like also when you think about how Netflix had to do it for so long, they would even, I think today, say, we overpaid for content now or early on, sure, hoping that then we could create a vibrant ecosystem. But it sounds to me like you're also suggesting that ecosystem can get disrupted later on if somebody else comes in and is willing to overpay.
You're right, Andrew. There's no doubt. You overpay up front. You actually build up your platform, then create a platform that is so compelling that everybody wants to be there, right? Like the NFL was dying to be on Netflix because they had so much reach globally. They wanted to be on Netflix at that point versus Netflix didn't have to go in and overpay for the NFL early on. They overpaid for lots of content, though, in the TV and movie business, so don't kid yourself. But I think the model here is if Ellison wants to be aggressive early on to make Paramount Plus a must-watch destination, he certainly can do it without Warner Brothers. There's obviously a unique regulatory window that we've talked about ad nauseum in terms of the Ellison family's relationship with Trump that may put them in a far better position than other companies like Comcast or Netflix or Amazon. So there is that reason for doing it is because you can, but I also don't think it is a must-have. And it's going to be interesting how he walks this line tonight because there are other bidders, it appears, for this asset in Warner Brothers.
Well, let's talk about that. And I think you're right. It seemed two-step to me. It seemed like this was, even before that first deal closed, this was going to be in the works.
Joe, wait, hold on, Joe. Stop on that. So why didn't he buy Warner Brothers first?
First. I don't know. Then, and here's where it makes me get uncomfortable talking about both Comcast and Versant. But, what's happening with Comcast stock, I don't know. It's 5-year low at least, I think. And I don't know whether that does Brian Roberts feel compelled to do something? And what would that look like? Is it possible as far as, and I've seen stuff you've written about how it might be possible to appease the Trump administration. What does it mean for Versant? Since I think it's a really valuable collection of things that might go to better at scale with some of the parts of these other places. Is broadband really an issue at Comcast that's not going to improve? All those things are questions. And Becky told me to ask all those things. Gave me a little.
We're just going to blame Becky.
None of those are my questions.
Okay, good. Those are all Becky's questions.
Yeah.
So let's just unpack that real quick. So on the most important thing is, it appears that Comcast is getting virtually no value for NBC Universal. You know, if you look at where Comcast is trading, it trades worse than Verizon, worse than T-Mobile, worse than Charter. Like, they are getting no value for this asset in NBC Universal. And so I think step one is, how do you unlock that value? Certainly merging that asset with Warner Brothers, the Warner Brothers studio and HBO. So sort of the new business that's being spun off from the Discovery Global piece as they break into two pieces. I think there is a tremendous amount of logic to that transaction. Can they get it approved regulatory-wise? They would obviously have to bend the knee and make changes to NBC News to appease the Trump administration. If they kept the TV stations, there's no FCC approval. So there is a path, Joe. I wouldn't say it's easy, but there is a path. But the much bigger question is, if you did that and you ended vertical integration at Comcast, then the broadband piece would be able to do certain transactions that might not be possible. And so whether that's with a wireless company or whether that's with another cable company, you start to unlock things that Walt Piecyk, my partner, has talked about in the broadband space that I don't think you can do when you're vertically integrated today. And so Comcast feels like they have to act.
But Rich, you're talking about breaking up Comcast, merged with NBC, spinning them off in all different ways. Does Comcast, do you think, still exist after that? They would be the buyer of some other broadband properties?
Well, NBC would merge in with Warner Brothers Discovery. Versant would obviously be a standalone company. So you'd have three separate sort of Comcast pieces. And then the Comcast broadband business, which would, essentially have that in Sky. Maybe Sky merges with something and you hive off Sky, which has not worked well for Comcast. And then the core U.S. broadband business looks for partners, whether they're the buyer or the seller. Becky, it's a really great question. I don't have the answer to that, but it does give you a lot more strategic flexibility than you have right now. I think right now they're sort of hamstrung, and I just look at the stock price and it sort of just has drifted for far too long. It feels like now is the time. And, if you actually do see Paramount buy Warner Brothers, then you don't have a merger or an obvious merger partner. So you might be in a worse position than trying something today. And so I feel like you got to try.
So here's the question. How much can you pay effectively for the Warner Brothers studios and HBO, effectively the streaming business, so that plus the spinoff from Time Warner Discovery happens, that has more value than whatever you think that David Ellison can come with?
Well, it's a very complicated math equation, because the question becomes how much cash. So how much cash does Comcast want to take out of Comcast broadband? They're under-levered, right? Like, they are well under-levered versus Verizon and T-Mobile and AT&T. And so you could certainly put more leverage on Comcast, inject cash to pay a dividend to Warner Brothers shareholders. Obviously, how you reflect the values is sort of an art more than a science, right, Andrew? Because you're not spinning Comcast stock into this. You're creating a new company and figuring out the ownership of those two pieces, and that's how you determine value. And so you have a tremendous amount of flexibility in how you value those pieces to get value to Warner Brothers shareholders. You can obviously do a lot of cash, but I would say a standalone studio company with essentially no cable networks other than maybe Bravo, but essentially a cable network-free company with studios, theme parks, and streaming assets. I have to imagine that's the company investors have always wanted to own.
Give me a number,
Disney.
Rich. You got to give me a number. You got to give me a number, because everyone's talking about $30 eventually, or $25.
Look, if the current offer was $23.50 or something around there from Skydance, and that is 80% cash, that's effectively, $20+ of cash. I have to imagine you have to be at a value with a substantial amount of cash that approaches $30 a share, or the board is just not going to say yes. I mean, I think you have to get close to 30, Andrew, or this is not happening.